Welcome to The Explainer. Today, we're digging into two massive, and I mean massive forces that are basically playing tug-of-war with the global markets, and we're going to figure out what that means for your investments. All right, let's get into it. So why is everyone holding their breath? I mean, from Wall Street all the way to Tokyo, you've got investors just glued to their screens, waiting. But what are they waiting for? Well, the tension all boils down to two huge unresolved questions. And these aren't just little things. They are giant stories pulling the markets in completely opposite directions. One is a classic economic puzzle happening right here at home in the US. The other, it's a geopolitical drama with consequences for, well, everyone. So in this explainer, we're going to break them both down. So first up, let's talk about the big domestic story, the Federal Reserve's dilemma. And man, are they in a tough spot. They're basically caught between a rock and a hard place, trying to juggle two economic signals that just don't want to play nice together. Okay, so this slide really shows a fascinating gap opening up in the economy. Now think about it like this. Your local baker. The price they pay for flour, for sugar, for all their ingredients, that's skyrocketing. That's the PPI, the Producer Price Index. But the price you pay for that delicious loaf of bread, it hasn't really budged yet. That's the CPI, the Consumer Price Index. So for now, the baker is just eating that extra cost. But you have to ask, how long can that possibly last before they have to pass those costs on to us? That is the big risk the market is watching like a hawk. And this is where the plot really thickens. You can see the conflict right here on the dashboard. Just look at those producer prices, the PPI. They are getting way hotter than they were last year. But, and this is the kicker, at the exact same time, the unemployment rate is ticking up, now sitting at 4.2%. This is basically the Fed's nightmare scenario, right? You've got these flashing red lights on inflation from producers, just as the job market is starting to look a little shaky. Whoa. Okay, this chart, this really drives the point home. Just look at that collapse. Last year, the economy was churning out about 124,000 jobs a month, on average. Pretty decent. This year, that number has absolutely cratered to just 35,000. For the folks at the Federal Reserve, this isn't just a cooling labor market. No way. This is a full-blown alarm bell, and it is ringing loud and clear. Yeah, and this quote just nails the problem, right? It gets to the heart of the incredibly tight rope that Fed Chair Jerome Powell has to walk right now. Does he go after those rising cost pressures and keep policy tight, even if it means more people lose their jobs? Or does he pivot, try to help the weakening labor market, and risk letting inflation really take off? You can see why his next speech is probably one of the most anticipated in years. Everyone's waiting to see which way he'll lean. All right, let's switch gears. We're going to pivot from the economy to geopolitics, because our second major story is just as important. And believe it or not, it's a story about a fragile, and I mean fragile, hope for peace that's starting to totally reshape the global risk landscape. So what's been happening? Well, recently we've seen some small but pretty significant steps toward a resolution in the Russia-Ukraine war. You've got high-level proposals being presented, these are being passed to Western leaders, and now a summit is being planned to actually go over the terms. Look, it's obviously incredibly complex and a long way from a done deal, but for the first time in a long time, there's some actual momentum toward the negotiating table. So why is this such a big deal? Well, for Europe, it's everything. The continent has just been hammered by the economic fallout from this conflict. We're talking massive energy shocks, huge defense spending, all kinds of trade disruptions. So you can imagine a peace deal could be like a giant shot of adrenaline for the European economy and, of course, for its assets. Okay, so we've got the Fed's puzzle on one hand and this glimmer of hope for peace on the other. Now let's connect the dots. Let's see how this is all impacting the markets in real time and what it means for your money. This is where it gets personal. Remember that hot wholesale price data we talked about? Well, this is the direct result. The market has seriously scaled back its bets on how many times the Fed is going to cut interest rates this year. Just a few weeks ago, traders were pretty confident we'd see more than 3/4-point cuts. Now, that's been dialed all the way back. They're only pricing in about 2. Basically, the market is saying, we think the Fed is taking those inflation signals very, very seriously. And when the market gets nervous or uncertain about what the Fed's going to do, where does all that money go? You guessed it, the US dollar. The dollar index, which is just a way to measure its strength against a bunch of other currencies, is trading strong, just under 98. It's kind of in a holding pattern, really, just waiting for a clear signal from Powell. But while the dollar is sitting on the sidelines, the stock markets are looking at that other story, the peace talks, and they're feeling pretty optimistic. Just look at this. Markets all across Asia, especially, are rallying on this hope of de-escalation. It just goes to show you how much a potential end to the war in Ukraine is seen as a huge positive for global growth. And here we see the other side of that coin playing out perfectly. As the hope for peace goes up, the need for safe haven assets like gold goes down, so its price is pulling back a bit. At the exact same time, the euro, which is obviously tied directly to stability in Europe, is getting stronger. It's a textbook risk-on, risk-off move, and it's happening right in front of us. Okay, so let's tie this all together. We've got these two incredibly powerful narratives: the Fed's inflation versus jobs puzzle and the fragile prospect for peace. And when you put them together, they create two very, very different paths for the global economy. So here it is. This is the bottom line. If you really want to understand where the markets are headed, you've got to watch how these two stories play out. Scenario 1, the Fed goes dovish, meaning they decide to focus on saving jobs, and the peace talks actually succeed. That would be a huge green light for stocks and the euro, but probably bad for the dollar. Now, Scenario 2, the Fed stays hawkish, tough on inflation, and the peace talks fall apart. That would almost certainly send investors running for the safety of the US dollar and gold, and it would be a rough ride for stocks. At the end of the day, it all boils down to these two massive questions: inflation or jobs, conflict or peace. The answers aren't just going to be headlines in the news. They are going to directly shape the entire global economic landscape and your investments for the rest of the year. And now you know exactly what to watch for.